Well, for more on what we've learned from this week's earnings, let's bring in Gene Munster, managing partner at Deepwater Asset Management, who's helped us, dissect these earnings as they cross the wires this whole week. Gene, great to see you again. What's sort of the headline here, and how do you apply that headline to how you view the markets, stocks, as we enter the next month?
Well, this week wasn't just about the Mag 7 or the earnings. We also had on Tuesday GTC and Jensen's keynote. And I think that plays into the bottom line takeaway was relative to the infrastructure side. What we saw, Jensen's comments, he effectively raised Nvidia's outlook versus the street by about 15% at least for the next 5 quarters. And then we got confirmation of that on Wednesday and Thursday. And so I think that's a big takeaway. I think kind of the hidden winner this week was Nvidia. The stock didn't really act like that because I think investors still struggle with a $5 trillion market cap. They struggle with the concept that hardware eventually blows up, and it's just a mind bender to think that we're still early in this capex build out. So that's why you don't see the appreciation. But clearly, Nvidia was from my perspective, kind of the winner this week. And I think that's probably a big takeaway. I think something else that we take away too is just the strength of these big companies, where it's with Apple, seeing the resurgence in iPhone from the upgrade from 4 years ago, those customers coming back. We see the habitual behavior around Google search and them being able to angle more questions into better search growth. And then we see those daily active user numbers from Meta. Steve was talking about them. And just to frame that in, I mean, they grew daily active users at 7.6% in the September quarter. That is a sequential acceleration for each of the past 5 quarters. It was 4% growth 5 quarters ago. So there is something that I take away from this week, which is just this reminder that these companies have moats, flywheels that are continuing to get strong and will serve them well in the future.
There's also, though, the reaction to Meta's capex spend and forecast for 2026, though, Gene. And are we at a point where investors are questioning what they're getting for those dollars spent on AI? Or is it just, is it idiosyncratic to Meta? Or are we starting to get to that point where people are thinking, what is the ROI here?
We talked earlier in the week is this concept of the flipping of the script for Meta. If you're curious, the day that the year of innovation started on February 1st, 2023, we're almost 3 years. But Meta has, at that point, when they started talking about that, we saw accelerating revenue and expenses growing at a slower pace. And I think that change of the narrative, I think, really stung investors, and the stock is working through it now. But I think there's a piece that gets missed in the whole equation. We talked about the daily users, but there's also these companies. I mean, this is such a massive transition that's going on. I mean, it's hard to come up with the adjectives to describe how the world is changing right now. The leadership piece is critical. This was the big knock against Google earlier in the year, that they didn't have the chops to really navigate through this. There wasn't that sense of urgency. And I think if you look at the Mag 7, the CEO that has the most urgency is probably the two, Musk and Zuckerberg. And so Zuck has been making this massive investment into talent. And talent matters in this race. And Llama's been a big disappointment. But those whiz kids that have joined Meta since the beginning of the summer, and it's not all happy days there. There's definitely friction. But I think that history would say that with a good leader in place, or at least an intense leader in place, that they're going to deliver something in the quarters to come that are going to cause that narrative to shift back to faster revenue growth versus expenses.
Gene, just to piggyback that, though, you've seen the data that AI spend is 92% of the growth in GDP for the first half of 2025. How can that be sustainable? It's 4% of GDP now.
Well, I guess the question on the sustainability is how can it be sustainable next year, next 2 years? It can be because of this intense race that's going on. Eventually, there's going to be this leveling off, and eventually the absolute dollars will probably decline. My guess is we're several years away from that. But the law of large numbers will catch up to that. But I think it kind of sending a mixed message here. I think that the clear message from my perspective is these numbers are mind-bending, and I think that they're going to continue to move higher. If you look at what what on September 9th, Susan Lee from the CFO of Meta said at the Goldman conference is that she basically gave some expectations that they're going to be growing capex close to 40% for the next 3 or 4 years. So, Steve, I think we're going to hit a wall at some point. We'll slow down at some point. Maybe not hit a wall, slow down. But I don't think it's close. I think we're going to be having the same conversation 6 months from now.